The year 2025 has emerged as a definitive inflection point for the North American silver mining industry, characterized by a structural shift in supply-demand dynamics and a renewed focus on jurisdictional security. Within this evolving landscape, America's Gold and Silver Corporation has positioned itself as a central protagonist through a series of aggressive operational turnarounds, strategic acquisitions, and the capitalization of its unique position as a domestic producer of critical minerals. This analysis examines the corporation's journey from a complex restructuring phase to a period of scaled production and market re-rating, underscored by its dominance in the Idaho Silver Valley and its transition toward high-margin silver-copper assets in Mexico. Executive leadership and the architecture of corporate transformation. The current investment thesis for America's Gold and Silver is inseparable from the leadership transition that commenced in late 2024. The appointment of Paul Andre Hewitt as chairman and chief executive officer brought a seasoned veteran of the underground mining sector to the helm, a move that the market has interpreted as a commitment to technical discipline and operational excellence. Hewitt, whose career spans more than 3 decades, is particularly recognized for his previous leadership at Karora Resources and Klondex Mines, where he demonstrated an ability to revitalize underperforming underground assets. This specific skill set has been directly applied to the company's cornerstone asset, the Galena Complex in Idaho.
A foundational element of this transformation was the consolidation of the Galena Complex in December 2024. Prior to this, the operation was a joint venture, which often introduced layers of complexity in decision-making and capital allocation. By acquiring the remaining 40% interest from Eric Sprott, the company achieved 100% ownership, effectively simplifying its corporate structure and allowing for the implementation of a unified strategic vision. This transaction also solidified the relationship with Eric Sprott, who remains the company's largest individual shareholder with a stake exceeding 20%, providing both a stable capital foundation and a significant vote of confidence from one of the most respected names in the precious metals sector. The leadership team was further strengthened with the appointment of Jim Curry as Chief Operating Officer and Tara Hassan to the Board of Directors, bringing additional technical and capital markets expertise to the organization. This concentration of talent has facilitated a rapid pivot toward a growth-oriented strategy that prioritizes the debottlenecking of existing infrastructure and the acquisition of neighboring high-potential assets. The Galena Complex, engineering a production surge in Idaho. The Galena Complex is situated in the heart of Idaho's Silver Valley, a district historically renowned for its high-grade silver mineralization. For much of the early 2020s, Galena suffered from logistical constraints that prevented the operation from reaching its full potential. The primary challenge was vertical logistics, specifically the capacity of the hoisting systems to move ore and waste rock efficiently from depth to the surface.
In early 2025, the management team initiated a multi-phase recapitalization and modernization program centered on the number 3 shaft. This shaft represents the primary artery for the mine's deepest and highest grade zones. The first phase of this upgrade, completed ahead of schedule in September 2025, involved replacing the aging 1,750 horsepower hoist motor with a significantly more powerful 2,250 horsepower unit. This improvement was not merely a maintenance task, but a fundamental capacity expansion. Before the upgrade, hoisting limitations forced the mine to operate with partially filled skips, particularly when pulling from lower levels, such as the 5,600 level. The new motor, combined with upgraded braking and hoist control automation, immediately doubled the skipping capacity from 40 tons per hour to approximately 80 tons per hour. The implications of this upgrade are profound for the mine's unit economics. By increasing the rate at which material can be hoisted, the fixed costs of the operation are spread over a larger volume of tonnage, significantly reducing the cost per ounce. Furthermore, the increased capacity allows for more aggressive development and waste movement, which are prerequisites for accessing new high-grade stopes. Phase 2 of the upgrade, scheduled for late 2025, aims to further optimize the skipping speed and control systems, targeting a steady-state capacity of up to 118 tons per hour. Complementing the infrastructure upgrades is a shift in mining methodology. The reintroduction of long-hole stoping as a primary extraction method has been a key pillar of the 2025 operational plan. Historically, the mine relied heavily on more labor-intensive cut-and-fill methods. Long-hole stoping, supported by a new fleet of underground mobile equipment, including remote-capable Komatsu loaders and 20-ton haul trucks, allows for safer and more efficient ore extraction. This modernization of the mining fleet, funded through a series of successful capital raises and debt facilities in mid-2025, is expected to reduce underground mining costs by as much as 60% compared to historical levels.
Regional consolidation.
the acquisition of the Crescent silver mine. The strategic logic of America's gold and silver reached a new level of clarity in late 2025 with the acquisition of the Crescent silver mine. Located just 9 miles from the Galena Complex, the Crescent mine is a fully permitted, past-producing asset that fits perfectly into the company's regional hub-and-spoke model. The acquisition was completed for a total consideration of approximately $65 million, comprising $20 million in cash and 11.1 million common shares. The Crescent mine hosts an impressive historical resource base, including 3.8 million ounces of silver in the measured and indicated categories and 19.1 million ounces in the inferred category. The true value of Crescent, however, lies in its synergies with the existing Galena infrastructure. The mineralized material at Crescent consists of high-grade tetrahedrite, which is mineralogically identical to the ore currently processed at the Galena mill. This allows the company to feed Crescent ore directly into its surplus milling capacity, which includes the 750 tons per day Galena mill and the 500 tons per day core mill, without requiring significant new surface permits or processing facilities.
Operational plans for Crescent involve a restart in 2027, with an initial production target of approximately 250 tons per day. Projections from research firms suggest that this could add 1.5 to 1.6 million ounces of silver to the company's annual production profile at a relatively low capital cost of $30 million for the restart. By consolidating these neighboring assets, America's Gold and Silver has created one of the largest high-grade silver resource bases in North America, totaling over 200 million ounces across its Idaho holdings. Strategic critical metal leverage, the antimony advantage. A unique and increasingly vital component of the investment case for America's gold and silver is its exposure to antimony. The Galena Complex is currently the only producing antimony mine in the United States, a status that has significant geopolitical and economic implications. Antimony is a critical mineral used in lead-acid batteries, flame retardants, semiconductors, and a variety of defense applications. As of 2025, over 90% of the global supply is controlled by China, Russia, and Tajikistan, creating an acute supply chain vulnerability for the United States. The strategic importance of this asset was underscored in late 2025 when the Pentagon began deploying significant capital to secure domestic sources of antimony after China implemented export restrictions. America's Gold and Silver has moved quickly to engage with the U.S. government on initiatives to expand domestic processing and primary production of antimony.
From an operational perspective, antimony is recovered as a byproduct of the high-grade silver-copper tetrahedrite ore at Galena. In 2025, the company achieved a metallurgical breakthrough, demonstrating that it could extract over 99% of the antimony from its copper concentrate. Through the first 3 quarters of 2025, the mine produced 447,466 pounds of antimony. This production serves as a powerful revenue kicker, effectively acting as a negative cost of production for the silver operations. The presence of a significant antimony resource at the newly acquired Crescent mine further enhances this strategic moat, positioning the company as a key player in the national security conversation regarding mineral independence. Mexican operations, navigating transition and regulatory reform. In Mexico, the Cosalá Operations in Sinaloa have traditionally provided a stable base of silver, lead, and zinc production. However, 2025 has been a year of profound transition for this asset as it moves from the base metal-heavy San Rafael mine to the high-grade silver-copper EC120 project. The EC120 project represents a higher-margin future for the Mexican operations. The ore body at EC120 is characterized by significantly higher silver and copper grades than the zones currently being mined at San Rafael. In Q3 2025, pre-production sales from EC120 generated $12.9 million in revenue, providing an early indication of the project's potential impact on the company's financial results. The company aims to reach full commercial production at EC120 by the end of 2025, a milestone that is expected to lead to a significant increase in annual silver output and a corresponding reduction in unit costs.
The Mexican mining sector has also been shaped by significant regulatory changes. The 2023 reforms to the mining law and national waters law introduced new requirements for public consultations, community benefit sharing, and environmental restoration. Notable among these is a mandate for mining companies to pay at least 5% of their profits to the communities affected by their operations. While these reforms created a period of uncertainty, America's Gold and Silver's long-standing community relationships and existing permits have allowed it to navigate these changes more effectively than many of its peers. Furthermore, the backlog of mining permits in Mexico began to ease in 2025, with nearly half of the pending issues resolved by the Ministry of Economy. Geological potential and exploration frontiers. The geological narrative of America's gold and silver is one of consistent high-grade discoveries that suggest a much longer and more productive mine life for its core assets than previously modeled. Throughout 2025, exploration drilling at the Galena Complex has delivered some of the most impressive silver intercepts in the company's history. A major focus has been the high-grade 034 vein, where drilling intersected 983 grams per ton of silver and 0.74% copper over a true width of 3.44 meters. Even more spectacular was the 149 vein extension, which returned an intercept of 24,913 grams per ton of silver and 16.9% copper over a narrow but incredibly rich 0.21 meters. These results confirm that the tetrahedrite systems in the Silver Valley remain open at depth and along strike, providing numerous targets for resource expansion.
Other significant discoveries in 2025 included the 049 vein, which yielded silver grades up to 53,839 grams per ton over 0.15 meters, and the expansion of the 181/182 veins. These veins are increasingly being incorporated into the mine plan, as the company's new underground infrastructure provides the access and hoisting capacity needed to exploit them. The synergy between exploration and engineering is the core driver of the company's goal to increase annual silver production to over 2.5 million ounces from the Galena Complex alone within the next 5 years. Financial architecture and capital deployment. The financial performance of America's Gold and Silver in 2025 must be understood through the lens of its massive recapitalization efforts. For the third quarter of 2025, the company reported revenue of US $30.6 million, a 37% increase from the US $22.3 million reported in the same quarter of the previous year. This top-line growth was primarily fueled by a 98% increase in silver production, which reached 765,000 ounces for the quarter. Despite the rising revenue, the company reported a net loss of US $15.7 million for Q3 2025. This loss, however, includes significant non-cash charges related to the impact of rising precious metal prices on the fair value of metals-based liabilities and the one-time costs associated with the operational transition in Mexico. A more representative metric of current performance is the adjusted EBITDA, which turned positive in Q3 2025 at US $1.9 million, compared to an EBITDA loss of US $1.3 million in the prior year's third quarter.
The company's balance sheet has been fortified by two major capital injections in 2025. In June, the company closed a $100 million debt facility with the SAF Group, which provided the non-dilutive capital needed for the Galena shaft upgrades and equipment purchases. This was followed in December by the closing of a $132.25 million bought deal private placement, which was significantly upsized due to strong investor demand. As of late 2025, the company is in its strongest financial position in years. It reported a cash balance of $39 million as of September 30, and the completion of the December financing has left it fully funded for its near-term growth initiatives. This liquidity provides a crucial buffer against commodity price volatility and allows the company to execute its long-term development plans without the immediate need for further equity dilution. The issue of share dilution, however, remains a point of consideration for investors. The December 2025 financing involved the issuance of over 33 million new common shares at US $4 per share. While this causes immediate dilution, the management team argues that the acquisition of the Crescent mine and the acceleration of production at Galena will be significantly accretive on a per-share basis once these projects reach full scale. Market positioning and macroeconomic tailwinds. The investment case for America's Gold and Silver is also supported by a powerful macroeconomic environment for silver. Throughout 2025, silver prices have surged, gaining over 75% year-over-year as the metal continues to benefit from its dual role as an industrial input and a monetary hedge.
The silver market is currently facing a sustained deficit, driven by the massive growth in solar panel manufacturing, electric vehicle electronics, and the ongoing energy transition.
Primary silver producers like America's Gold and Silver are uniquely positioned to benefit from these dynamics. Unlike most silver in the world, which is produced as a byproduct of lead, zinc, or copper mining, America's Gold and Silver derives a high percentage of its revenue directly from silver. As of late 2025, silver revenue concentration is projected to reach 80%, one of the highest among North American miners. When compared to its peer group, America's Gold and Silver has been one of the top performers in terms of share price return in 2025. The stock delivered a total shareholder return of over 350% for the year, significantly outperforming benchmark silver indices and larger competitors like Pan American Silver and First Majestic Silver. Despite this run, many analysts still view the company as undervalued. In late 2025, the company was trading at approximately 1.0 times its price to net asset value, P to NAV, compared to a peer average of 1.22 times, suggesting further room for a valuation re-rating as its operational growth is fully realized. Risk management and operational resilience. Investing in America's Gold and Silver is not without its risks, many of which are inherent to the underground mining industry. The primary operational risk centers on the execution of the multi-year mine plans at Galena and the integration of the Crescent mine. Underground mining is technically complex and can be subject to unforeseen geological challenges or equipment failures. The company's focus on modernization and the acquisition of a new fleet are designed to mitigate these risks, but they require consistent maintenance and a skilled workforce.
Jurisdictional risk, particularly in Mexico, remains a factor. While the 2025 permitting environment has improved, any shift in political sentiment toward the mining sector could introduce new challenges. Similarly, in the United States, the strategic importance of antimony has brought more eyes onto the Galena operation, which could lead to both increased government support and increased regulatory scrutiny. Financial risk is also present due to the company's debt levels. While the $100 million SAF facility and the December financing have provided ample liquidity, the company must continue to grow its production to service its interest payments and eventually repay the principal. The move toward positive adjusted EBITDA is a critical first step, but sustained free cash flow will be necessary to de-risk the balance sheet over the long term. The status of the Relief Canyon mine in Nevada provides a different kind of risk. Currently on care and maintenance, Relief Canyon represents an asset that has underperformed in the past. While it holds technical value and is located in one of the world's best mining jurisdictions, the company's current focus is clearly on its silver-rich assets in Idaho and Mexico. Any future decision to restart or divest Relief Canyon will be a major test of management's capital allocation skills. Future projections: the path to mid-tier producer status. The outlook for America's Gold and Silver in 2026 and beyond is one of rapid growth. The combination of the Galena Complex and the Crescent mine is expected to create a production hub capable of delivering 7.5 to 8.0 million silver equivalent ounces per year. This production profile would place the company firmly in the ranks of the mid-tier North American silver producers. Key milestones to watch in 2026 include the completion of Phase 2 hoist upgrades at Galena, the first full year of commercial production at the EC120 project in Mexico, and the initial development results from the Crescent Mine Restart Program. Additionally, the potential for new high-grade discoveries at Galena remains high as the mine's deep extensions and recently discovered veins are explored with greater intensity. The strategic value of the company's antimony production is also likely to grow. As the United States continues its push for critical mineral independence, America's Gold and Silver's position as the only current domestic producer of antimony could lead to a variety of strategic partnerships or government-backed funding opportunities. The investment thesis. America's Gold and Silver Corporation has successfully navigated a period of intense transition to emerge as a high-growth, silver-focused producer with a significant critical metals advantage. The corporate turnaround, led by an experienced management team and supported by institutional shareholders like Eric Sprott, has addressed the historical infrastructure bottlenecks that held back the company's performance. The acquisition of the Crescent silver mine and the transition to the EC120 project in Mexico provide a clear pathway to higher production and lower unit costs.
When combined with the company's unique role as the only domestic producer of antimony in the United States, America's Gold and Silver offers a compelling combination of precious metals leverage and strategic commodity security. While the company faces the standard risks of the mining industry, its fortified balance sheet and demonstrated operational progress in 2025 have significantly de-risked the investment case. For investors looking to capitalize on the structural deficit in the silver market and the push for North American mineral independence, America's Gold and Silver represents a uniquely positioned asset with substantial upside potential as it continues its trajectory toward mid-tier producer status. The alignment of strong commodity prices, operational execution, and strategic regional consolidation suggests that 2026 will be a milestone year for the company and its stakeholders. The geological endowment of the Silver Valley, coupled with the modern engineering approach being implemented by the current management team, has effectively restarted the clock on assets that have been productive for over a century. This marriage of historical grade and modern mechanization is the engine that will drive the next decade of growth for America's Gold and Silver Corporation. As the company moves toward commercial production at EC120 and restarts the Crescent mine, the market's perception of the stock is likely to evolve from that of a struggling junior to a highly valued multi-asset producer with one of the most strategic portfolios in the North American mining sector. In conclusion, the convergence of operational turnarounds, strategic regional consolidation, and the emergence of a domestic critical mineral story has created an investment opportunity. America's Gold and Silver has built a platform that is highly sensitive to the silver price while offering a defensive moat through its strategic metals production. As the company executes on its 2026 production goals, the gap between its current valuation and its mid-tier peers is expected to close, providing a period of potential outperformance for disciplined investors. The company has moved beyond the restructuring phase and is now entering the scaling phase, where the focus will remain on delivering the high-grade ounces that its world-class assets produce.